So I want to get started here with this clip from NBC discussing
Alarm outside headquarters of
Silicon Valley Bank, which is the second largest bank collapse since 2008. But what actually happened here and how is Khanna connected? Let's dive right in.
Alarm outside headquarters of Silicon Valley Bank in Santa Clara, California today.
They just came out and told us that the bank is shut down.
SVB, the 16th largest bank in the U.S. with $175 billion in deposits, is now the biggest American bank to fail since the 2008 financial crisis. Its customers are primarily businesses and investors in the tech sector.
The root cause of the failure here was a sudden and significant increase in interest rates, which, that part of the job of a bank is to manage interest rate risk, and that didn't happen here.
Earlier this week, SVB disclosed it took a loss on the sale of bonds due to rising interest rates and announced it would sell shares to shore up its balance sheet. Its stock price plunged and customers rushed to take their money out. The FDIC now stepping in, telling customers they will be able to access funds by Monday, but the guaranteed amount per depositor, $250,000.
A heart-stopping moment of this bank is done.
Ashley Trenier is the CEO of healthcare startup Farmbox RX. Unable to access her money today, she fears she could be out more than $10 million.
$250,000 isn't a ton of money to us when you're talking of 8 figures that's in the bank currently.
Let's just comment here for just a second. Imagine if you woke up tomorrow morning and you went to the bank and you said, you know what, I'm going to go to the ATM and take out some cash. And you get there and you were told that you cannot access your funds. Imagine if that happened to you. That is what's happening to people that were connected to SVB. They're having to deal with that. They can't even take out the money. But you have money there that you cannot withdraw. Imagine if that happened to you. What would you do? My dad always told me it's a good idea to have cash on hand. He told me this because I'm not one to carry cash. But it is a good idea. It is a good idea to have cash stashed away in whatever place you consider to be safe, so that in the event you cannot access your account, you still have a way to get cash in hand. But this should have never happened. And it's given me '08 vibes, all over again. And there are people saying, well, it's not like this is going to spread. We don't know that. We heard that back in '08, remember? When they said, oh, it was just one bank here, one bank there, no biggie. And then there was a huge collapse. And the government, which was under the Obama administration at that time, had to make a decision. And that decision was, do we bail out Wall Street and the banks, or do we bail out the American people that just lost their homes? Barack Obama chose not only to bail out Wall Street, but he also chose not to help those individuals that lost their homes. Those homes were foreclosed, and companies like BlackRock stepped in to purchase those foreclosed properties, renovated those properties, and made a lot of money off of it. And more Americans were homeless on the street because of it. Let's go on.
Concern over today's collapse of SVB drove Wall Street lower. The banking sector alone down more than 4%. Treasury Secretary Janet Yellen.
There are recent developments that concern a few banks that I'm monitoring very carefully.
The immediate concern, the cash-burning startups who have millions in SVB and may not be able to access the money they need to pay bills or make payroll.
Deirdre, given what happened today, how much concern is there about the banking sector overall?
So they even have concerns in reference to making payroll. So you have to remember, this bank in particular is heavily connected to the tech industry, startups in that Silicon Valley area. Now that can include Google, Facebook, all these other startups that a lot of us probably haven't even heard of unless we live out that way. So it's not just the fact that people cannot go to the bank to withdraw money. It's also the fact that they may not even be able to pay their employees, which could lead to more layoffs. I have to remind you that some of these tech companies have already laid off thousands of workers just over a month ago. So this is a huge, huge deal.
Lester, at this point, the issue seems contained to this one bank. SVB was so heavily focused on these startup tech companies that its business model put it in a risky position that the major banks don't face in the same way. Lester?
Deirdre Boza tonight. Thank you.
Oh,
Thanks for watching our.
So now there's more that goes into this. Khanna actually not only tweeted about this, of course, as Khanna would do, but Khanna also had an interview on Meet the Press to talk about this very issue. And it was really interesting to me because I noticed that out of all the politicians, Khanna seemed to be heavily focused on this particular bank. Now, I'm going to show you that discussion on Meet the Press in just a second, but I want to explain to you what it was like for some of the customers to scramble to take their money out of that bank. And not only that, you also have to keep in mind that the CEO made sure to get all of his money out before the collapse happened. Let's go on. Let's get into it.
When did you find out something was wrong?
So my co-founder, Audrey Wu, and I received an email from one of our seed investors. The email seemed cryptic. It was strange. It was urgent.
Let me correct and say she. Sorry, I think I said he. This is the CEO. This is Ruth Health, CEO. And she also has money in Silicon Valley Bank. Let's go on.
It was not like the other emails he sends. And we were in meetings, we run a busy maternal health startup. We have so many concerns every day that this email just didn't make sense. So a few hours later, I called the investor and I said, hey, what was this email about? He was out of breath, like he had just run a marathon. And he said, take your money out of SVB, go into your account, take your money out as soon as possible. And, as a business owner, my co-founder, Audrey, and I constantly think about two things. We think about our team, the people we employ and their families, and we think about our patients.
And I want to know, for the other customers of SVB, were they given that warning at that same time as well? Take your money out? Or was that information only given to the CEOs? Apparently, it wasn't given to the other customers because, like I said, they told you they couldn't take their money out. They couldn't withdraw money. So why is it okay for the CEO to have that warning and to get their money out, but not for everybody else who's banking there?
The mothers, the new moms, and the families that we support and their families. And so for us, it was do this now or else.
Okay, and this was what, yesterday or the day before?
This was yesterday between the hours of noon and 3 p.m.
Okay, yesterday between the hours of noon and 3 p.m. you get this. So then you do it. You go and and how does that happen? They actually give you the money? I mean, these are the 3 hours before the world fell apart. So what happened then?
Well, we were incredibly lucky to have that news early from an investor. We didn't withdraw the money immediately. We're conscientious business owners. We spoke to a few other investors. We spoke to friends. I mean,
they had that warning from an investor. You see how it works for the people who are on the inside? I don't even know if I believe this woman. I don't know if I trust what she's saying when she goes, we didn't withdraw the money immediately. We're conscientious business owners. Do you buy that?
This is like calls going off the hook for the last 36 hours. When we felt confident that this was going to be a crisis, Audrey acted fast. And this is the kind of fear that actually incites focus. We withdrew the money through transfers and wires as soon as possible. I mean, she was withdrawing small amounts, big amounts, just to not set off an AI that might limit our withdrawals.
So they knew how to play this game. So let me explain what she's talking about here about how they withdrew the money. So if you go to the bank and let's say you withdraw like $15,000 and then you come back 30 minutes later and withdraw another $15,000, the bank is most likely going to flag that as unusual activity. It may block your card. It may lock your account to the point where you can't withdraw the rest of that money because obviously they have these systems in place where they're like, well, wait a minute, this person doesn't usually make this type of withdrawal for this amount and repeatedly throughout the day. So they knew that because they're a part of the system. So they knew to actually go there and to withdraw small amounts and then maybe a large amount so that it doesn't get that flag, so that their account is not locked and they can get the rest of that money out. The problem is a lot of people in this country, I would say the average American, does not realize that. And sometimes they don't find out until they get that flag. There was a time I deposited a check. I'll never forget this. I deposited a check one time, and it took a whole week to clear my account because of the amount of the check. Now, this was when I was in grad school. This was the leftover money from my student loans. This was the money that I was going to use to get my books and et cetera, other things that I needed for my course. But it took a whole week for the bank to clear that check because it wasn't used to me getting that amount of money. So what I'm trying to tell you guys is that the people on the inside, they knew how to work the system so that they would protect themselves and they would make sure they got their money out. Everybody else is screwed over. And this is a problem. This is a big problem with the system. Let's go on.
And we were able to remove, this was not our only bank account, but we were able to remove the majority of the funds so that what was left when the website crashed was below the $250,000 FDIC.
Right. So you have money there. And I know and the FDIC, in terms of, because the amount, I mean, obviously you had a lot more than that there. You were able to get that out. The amount that you have that's insured now by the FDIC, the $250,000, your understanding is you're going to get that pretty much right away.
What we're hearing is by Monday.
Okay.
So there you go. That's the $250,000 that was referenced in the previous clip. But I do not trust these people. I don't believe what they're saying. I think these people are extremely nervous right now. And I think they're trying to do whatever they can to cover their self. And that includes someone like Ro Khanna, because Ro Khanna, I think I said meet the press, it's Face the Nation. Ro Khanna was on Face the Nation talking about this very issue. And there's a couple of things I want to point out here, because you need to ask yourself, why is Ro Khanna, I don't see any other politicians commenting on this as heavily as he is. Why is Ro Khanna so heavily invested in this particular banking issue? I don't even think I've heard Joe Biden make a statement about this yet. We're going to get into that. But first, this interview here with Face the Nation.
We're joined now by Congressman Ro Khanna. He is a Democrat who represents the California district where Silicon Valley Bank was once headquartered.
Cheesing too hard
here. I wonder what you make of the Treasury Secretary's remarks. I know you've been in contact with the White House, with Treasury, and with FDIC.
I have great respect for Secretary Yellen, but I think we need to have more clarity and greater strength in what Treasury is saying. First, the principle needs to be that all depositors will be protected and have full access to their accounts Monday morning.
All depositors, meaning those with accounts bigger than $250,000, which is the cutoff for insurance right now.
Yes, all of them. There's precedent for this.
Did you hear what he just said? There's precedent for it. So again, like, if your account is not bigger than $250,000, you're not a part of that precedent. This is the point that I really want to drive home. Again, they're playing to a certain group of people.
Powell, when he was at Treasury in 1991, the Bank of New England collapsed. And Chair Powell said that Treasury coordinated with FDIC and with the Fed, and they insured every depositor then. And why did they do it? They didn't want a regional run on the banks. Here's what I'm hearing from people in my constituency. They are getting notes to pull out of regional banks, and all of this will be consolidated in the top 4 banks. We don't want that as a nation, especially if you're progressive. The other thing is the payroll companies that are involved. Some of them have 400,000 folks. They're not going to be able to meet payroll if they don't have access to the deposits. And then go ahead.
No, so you wanted to hear from the Treasury Secretary a statement that said the U.S. government will guarantee all depositors?
Yes, just like they did with the Bank of New England. Now, here's the thing. It's not going to cost taxpayers money, because if you look at the financials of SVB, they have the assets. They don't have the liquidity. What happened is they had these long-term Treasury bonds, And then the Fed hiked interest rates very, very fast. We can debate the wisdom of that. And they were, this was the cause. Those assets still have value. We need the liquidity. Now, there may have been mismanagement, and we can get into that. But right now, the key thing is for the depositors to have access to those accounts.
So the Treasury Secretary also said that acquisitions are an option here. That indicates perhaps a private sector option with another bank or other banks buying up these assets and taking these on. Are you comfortable with that?
Yes, and that would be the ideal situation, and our delegation that talked to the FDIC last night made that clear. But to have that happen,
Is that what FDIC is working on?
That's what we urge them to work on. They said they're working on it. But to have that happen, you need FDIC and Treasury involved, because these assets are not liquid and they may pay off 10 years from now. I don't think you're going to get a private seller without the Treasury Department and FDIC being actively engaged in helping liquidity with these Treasury bonds.
And you know that.
Now, let me just chime in here for just a second. Something that he said when he mentioned the taxpayers. Well, this is not going to cost the taxpayers money. It shouldn't cost the taxpayers money regardless, because there is a thing called MMT, modern monetary theory, which tells us that the government can just print money. And Ro Khanna knows about MMT. When I talked to Professor Kaboub, when he was on this show over a year, I think it was last year he came onto the show, I did ask him, are there politicians in DC that are aware of MMT, that know what that means? And he said, yes. He said, in fact, Ro Khanna is one of them. So this is another thing, is like as many interviews as you see Ro Khanna do in reference to finances, in reference to the money that the government can spend, you never hear Ro Khanna mention MMT, and he is very much aware of it. This whole idea that the taxpayers would even be remotely involved is ludicrous, because the government can just print the money. This whole idea, this goes even to the deficit ceiling. They explain this very well on Real Progressives. Even when it comes to the budget deficit, and they talk about the debt ceiling. The debt ceiling isn't even real. It doesn't even exist. This is just another excuse for them to not give us what we should have, the American people. So they can give these excuses and say, we can't give everybody Medicare for all. It's too expensive and we have to balance out the budget. But you never hear them say that when it comes to the defense budget. You never hear them make that claim. Let's go on a little bit longer here, and then I'm going to show you how Ro Khanna is invested in this particular situation.
That's not happening.
Whether they're engaged, I think they need to be engaged. They say they're engaged, but they need to resolve this by Monday morning. And I think the way to resolve it is to say depositors will have access to the accounts. Look, the bargain in our country from FDR has always been investors, shareholders lose. I have no sympathy for the executives, no sympathy for people who have stock there. But the depositors are protected. And let's talk about who these depositors are. They're not just the payroll companies. These are climate startups. These are startups that are helping cure cancer. These are companies in the wine industry. These are companies that are dealing with AI and defense to keep us ahead of China. 50,000 of them. And they're employing Americans across the country. And they didn't take risks. They just had their money in a bank. And we're saying those need to be guaranteed.
And are you referring to yourself too, Ro Khanna?
Well, the president apparently spoke with the governor of California last night. Do you think the president understands the gravity of what you're laying out here? If you don't think the Treasury is speaking to this, or that the Fed is addressing it?
I think they understand the gravity, but they need to take decisive action.
Because time's ticking here.
Time is ticking, and it's by Monday morning. And I would just urge them and Chair Powell to look at what he said in his own speech in 2013. And the question I'd ask Chair Powell is, if it was good enough for the Bank of New England and you understood what was going to happen with a regional run. Look, I think the U.S. banking is secure. I don't think this is a systemic risk. Here's what's going to happen. Every person in these tech companies is getting emails. Pull your money out of the regional banks, put them in the big four.
What's the problem? Is it political will? Is it concern that there will be blowback for the administration? I mean, why wouldn't there be the immediacy? Or are you indicating it's Chair Powell that you know is opposed?
No, I don't think. I think it's just that right now things move at the speed of Twitter, and the government doesn't move at that speed. And I think they don't realize what the problem could be and how fast money is moving and the challenge this could be. There is no systemic risk, but there is a risk on consolidation. And by the way, progressives should be the most concerned about this. If you don't want banking sector to be J.P. Morgan, Citibank, Bank of America, and Wells Fargo.
Well, it may have to be. right?
Yeah.
Is what
Let's comment on something here. When he talks about that the government doesn't move at that speed, the speed of Twitter. The government does move quickly when it wants to. When it's time to give more billions of dollars to Ukraine, the government moves just like that. When it is time to vote to increase the defense budget, the government moved very quickly. So the government can move quickly. It just moves quickly on the issues that it wants to move quickly on, the issues that are actually going to be profitable for military industrial complex. Of course, Khanna isn't going to tell you that. Now, I want to get into this discussion here that they're talking about, like JP Morgan. I believe it was 1914. I have to look this up again. I've talked about this on the show before. But back then, JP Morgan, the actual JP Morgan, the person, he actually rescued the federal government. There was another bank collapse. And all of the banks that did collapse in New York, the ones that were still around at that point in time after this happened, you know who bought those banks? JP Morgan. JP Morgan bought those banks and then owned those banks. And that is one of the reasons why JP Morgan is as large as it is today. So some of the pushback that people have been giving is, why don't they just let one of the bigger banks like Bank of America just buy this bank, consume it, and just keep it moving? The problem is when you have those larger banks come in and they just swallow up these other banks, yes, Bank of America would get even larger than it is right now. But we all know what happens when those banks increase. They don't operate as smoothly. The customer service sucks. And Bank of America's customer service is already horrible, in my opinion. From my experiences, it's horrible. But the last thing that we want to happen is for the central banks, like the Bank of America, the JP Morgans. The last thing that we want is for these banks to get bigger. And this is why I've been pushing heavily on the show about the need for public banks. We need to pull ourselves away from the central banking system. They own too much. It's not just a place where people have accounts. It's also an industry that has been buying up property, that's been buying up real estate. They are complicit when you look at gentrification. It's not just the professionals moving into those neighborhoods that are causing it. It's also the banking industry. So we really have to break up those banks, and we need to move away from the central banking system.
What you're saying.
That's what's going to happen if the government doesn't step up here. And it's not going to cost taxpayers because the assets are there.
The assets are there. So, which is why you're.
Notice how he keeps saying it's not going to cost taxpayers. Why would it cost us? It shouldn't cost us anything at all. What did we do?
Saying government bailout is not what you're talking about, just to be clear here. You tweeted yesterday the government also needs to investigate short sales by corporate executives. That's betting a stock price is going to go down. Bloomberg also reported that the CEO of SVB Bank, Gregory Becker, sold $3.6 million of stock the day before the company collapsed.
This is the gentleman I was referring to earlier, Greg Becker, president and CEO of Silicon Valley Bank, SVB. He sold stocks the day before. Now, coincidence? I think not. I don't even know if that's legal. Like, honestly, looking back on it, that's not fair. He knew what was coming. Let's just go ahead and say it. He knew what was coming. And he was able to go ahead and sell all his stocks so that he would not have to suffer when this bank collapsed. I don't think that that's right. And I don't think that it's fair. And did he tell anybody else about that? Did he warn any of the other people that had SVB stock? Hey, go ahead and sell this. This bank is about to go under. Why did he get to have that privilege and everybody else got to watch their money just go away? This is what I mean when I say the wealthy, they make sure they look out and protect their self and protect their class. Just like the woman in the previous interview where she said, we got the alert from an investor, So we were able to go ahead and just withdraw our money just like that. Other people didn't get that opportunity. So I don't even think that should be legal, the fact that he was able to do this.
What exactly do you think occurred here?
Well, first of all, we need all the facts. I do think that money should be clawed back and used for places like Silicon Valley Community Center in my district that has money that
Clawed
they
back
could
from
get.
the CEO, who you know.
Clawed back from the CEO, who I've known. But whether there was something nefarious or not, look, you know 10b-5s where they have to make the sale years before or month before. So I don't want people to jump to conclusions, but I do think all that money should be clawed back and given to the depositors.
Jump to conclusions. He sold his stock the day before the bank closed. I really don't think that's jumping to conclusions. I think that is very clear. He saw what was coming.
The depositors, insured or otherwise.
Insured
basically.
or otherwise.
So what do you think the big picture impact is or could be on the heart of American innovation? I mean, the tech sector is very important to American competitiveness.
It means that the companies that are looking for cures to cancer, the companies that are doing the climate work, the companies that are keeping us ahead of China on AI and defense technology, all of them are at risk. Some of them will go under.
Do you hear how he describes these tech companies? Cures for cancer, climate change. Okay. I'm pretty sure most of those tech companies and those startups are not doing that work. Why is Khanna trying to run cover for the tech industry? Remember, that's his district, right? These are his supporters. These are his donors. Again, no one else is doing this. I don't see, listen, there are other politicians in DC that are from California. I don't see them talking to Barbara Lee about this. I don't see them talking to Katie Porter about this. I don't see them talking to Nancy Pelosi about this. But Khanna was the first to rush and speak about it, not just on Face the Nation, but also on Twitter.
Some of them are going to be laying people off. It's going to mean people aren't going to be able to make their rents. And here's the point. All of the legislation we passed in Congress, the IRA to tackle climate, the CHIPS Act to bring semiconductors back, it relies on the innovation pipeline. It relies on the tech pipeline. And that is why this is such an important issue. What is hurting it is the rapid rise of interest rates, as well as now this systemic risk. And it's going to hurt the innovation pipeline, and it's going to hurt ordinary people.
And it might hurt people like him. Because this was sent my way, and shout out to the individual who sent me this because, well, we'll go to Nick's first. Let's go to Nick's tweet first, and then I'll go to the SVB stocks. You see, Nick tweeted this. Khanna wants to bail out the Silicon Valley Bank because he's on the payroll. With progressives like these, who needs neoliberals? Let's take a look at it. Again, this is FEC.gov data. This is public information. See, most Americans are not going to look this up. But here we go. If you look down here, it says Row for Congress, Inc., recipient name or ID, Khanna for Congress. This is Khanna. I wish I could zoom in, but I can't on the Twitter pictures. And then it says individual contributions. And these are the different years, 2021 to 22, 2015, 2016, 2017, 2018, that one's hard to see, 2010 to 2020, 2023 to 24. And it shows you here, Khanna, Row for Congress, Inc., Khanna for Congress, Silicon Valley Bank. Contributor name, Greg Becker. Greg Becker is the CEO. That was the gentleman we were just talking about. Recipient, Row for Congress, Inc. That's May 17, 2018. That's also August 13th, 2015. So those are just a few of the dates. And then we're going to get to this issue here with the stock as well. Now, this gentleman, Lachlan Marquet, he has the little emoji eyes here. I love it. I love it. He points out that Ro Khanna said, imagine if politicians' campaign funds were in Silicon Valley Bank. Does anyone think we wouldn't have had more action and communication? We owe hardworking Americans, farm workers, employees worrying about rent, retirees, the same urgency about deposits that determine whether they get paid. And then if you notice here, you'll see it says this reply was hidden by the original tweet author. So the original tweet author would be Ro Khanna. And I want to show you the reply that they're referring to, because someone replied to Ro Khanna, and I'm going to show this on a bigger screen. It was BankU's not giving Elon $8 said this you with a question mark. And I'm going to show you what they were highlighting, because what they were pointing out is SVB trades, stock trades with Ro Khanna. Now, let me see if it'll let me. It may not let me make it bigger. Oh, it does. Okay. Okay, yeah, that's good. So I want you to see what you're looking at. Now, if you go to Capital Trades, and all you have to do is search Ro Khanna. Okay, let's click on Show Details. Trades 13,480. Issuers 1,232. Volume over 223 million. Last traded January 31st, 2023, District 17. Years active, 2017 to 2025. They even have his date of birth. So we know this is him. Now, if we look here at the top, it says politicians, Ro Khanna, SVB Financial Group. And by the way, if you hit this drop down, you can select different companies as well. But SVB Financial Group, let's scroll down. Here's a graph. And it shows you again the traded issuer. So you see, this is stock. This is SVB Financial Group stock. And this is under Ro Khanna. So the last time there was a trade was in January, which matches what it says here. Last traded January 31st, 2023. So the last time he traded was in January. Notice under type, it says buy. So you have the option to buy and you have the option to sell. And we can just scroll down. This isn't new. Look, January, December, November, October. And you can even click explore more trades. But I want to stay focused on this one. And let's go to this graph. SVB Financial Group. So you can see they actually had a pretty good run here when we get to this point here. But notice how it starts to look. Notice how it's starting to decrease. Boop. Right? So say whatever you want about me, but the data doesn't lie. So whether you like Ro Khanna or not, look at what the data is showing you. Now, we have pushed Ro Khanna about this before on Twitter. We asked him, why are you trading stocks? And Ro Khanna's response was, these are not his stocks. He said these belong to his wife, which she had before they got married. But according to Capital Trades, this is his name. This is his name. So either if that's true, why would someone else trade stocks under his name? It's his name. Joanna, that's sus. Why would he buy after months of selling? These are all good questions. These are all good questions. So again, I can't go by what Ro Khanna told me. I can go by the data. So what you tell me doesn't mean anything if the data is showing the opposite. So that goes back to what this gentleman or this person was saying here, this you. And that's the screenshot Whereas obviously he looked this up on a phone, on mobile, SVB Financial Group. And it, again, January, February, December. It's a screenshot, so I can't click on it. But after I saw that screenshot, I said, let me look this up for myself because, you know, just to make sure. And sure enough, there it is. So I don't know what to, I don't know what else to say. Because again, this is the data. Data doesn't lie. He was on a Twitter space recently, a Twitter space saying the same thing. It's a recorded Twitter space saying that those are not his stocks, but it's under his name. So even if it wasn't him, it should have never been under his name to begin with. I just think this is suspect to me. This is suspect. And so here's my thing. A lot of people get on Nancy Pelosi about trading stocks, but Nancy Pelosi doesn't even lie about it though. It's not like she says, no, that's not me. That's Paul. Ro Khanna says it's not him. It's under his name. And then we have to go back. We have to go back to this and we have to ask. Whoops, my cursor here. We have to ask, why did he hide the comment? If we go back here, again, thank you, Lachlan, for this. Thank you. Because this was Ro Khanna's tweet. And then it says the reply was hidden by the original tweet author. So again, if it's not you trading the stocks, why did you hide the comment that showed your name attached to the stocks? If this is not an issue, why did you hide it? I don't know. I don't know what else to say. And shout out to my friend. Thank you for sending me this. It just, again, anyone can look this up. Anyone can look up this information. BHF says Sabby is better investigator than Angela Lansbury. Well, shout out to my friend. My friend does a lot of financial research and sent me this. And I was just like, I just, again, if there's nothing wrong with this information, then why did he hide it? Why did he hide the tweet? I don't know who's interviewing Ro Khanna next, but if you're seeing this, ask him about these stocks. Now, there's more with SVB because it's not even just about Ro Khanna. There's also this issue with Russia and Ukraine. And shout out to the person who sent me this as well. Examining market response to the Ukraine conflict. This is on their page. So this was posted. So the conflict meeting was February 28th of 2022. So this was last year. Listen to this. Make this bigger. The invasion of Ukraine by Russian forces cemented for investors that geopolitical risk has moved into the forefront in terms of market dynamics. While the threat of military action is cause for great concern from a geopolitical and social perspective, there is little historical evidence to indicate that the current conflict will have a significant negative impact on the equity markets over the long term. During this Monday's webinar, Chief Investment Officer, Private Bank Wealth Management, Shannon Sakosia, and John Longley, Head of Private Bank Wealth Trust and Wine, share their insights on the market during this trying time. And here are all the speakers here, or they show some of them. There's John and there's Shannon. And it's just, so did they have their hands in investing in the conflict with Russia and Ukraine? And is that why they tumbled? They're not talking about this on mainstream media. As many segments that I have watched about this SBF crisis. I haven't seen anybody mention this issue with Russia and Ukraine, and I didn't see anybody mention this issue with Ro Khanna's name being attached to SVB stocks. So that's that. Let's go on to some of the comments. I don't even know what to say at this point. I don't know what to say at this point. But do you see why? Do you see why if he had that urge to push, let's bail them out? Let's go on. Zach, thank you so much for the super chat. Ro Khanna looks like a mannequin in a Macy's. Yikes. Joe, OWS, this is why commercial banking and investment banking should not be allowed to merge, as they are gambling with your money. Thanks for the super chat, Colin. You said the average person won't look this up. Sadly, neither will mainstream media. They haven't said anything about this. Thank you for the super chat, Robert. Ro Khanna talks the talk, but never walks the walk. Look, I have gone over that stock information that I just shown you with multiple people just to make sure I'm seeing what I'm seeing. And they all confirmed it. I'll take the comment on Rockfin, Eric. Thank you for the tip, Roger. This bank been around since Lisa. I wonder if I can take you home. Was at the top of the charts, yet Friday was the first time I've ever heard of it. If this don't scare us into running CBIs for public banks, I don't know what will. Philly and San Francisco leading the way as they pass public bank legislation by veto-proof majorities, with LA coming up on the rear, while New York State, Massachusetts, Oregon, and Washington State just put out their own state legislation. Thanks for this tip as well. How many crashes do we have to go through until those living in CBI states start leading the way and show the rest of us in non-CBI states how it's done? California, Colorado, Arkansas, is it Arkansas? Yeah, Arkansas, Arizona. I think it's Arizona. I think you mean AZ. Nebraska, the Dakotas, Missouri, Montana, Oklahoma, Oregon, Ohio, Michigan, Nevada, Florida, and Illinois all allow voters to use the CBI process to amend their state constitution. Let's not wait until it's too late and not waste too much time with the debate. I hear you. I hear you on that, Roger. This is just something else. I don't know what else to say. Mary says he doesn't want to be associated with the downturn. Robert, I'm going to post this video on all my Facebook groups when it lands. Thank you so much. Get this message out to as many people as possible. That's all I'm going to say, because this is a very telling moment. Like I said, if there was nothing wrong with that information, why did he hide the tweet?